Troy Bader, President and CEO of International Dairy Queen. Good to see you. It's pretty busy. There's a lot of folks here. You got enough for everybody?
We do. It's always wonderful to see the lines and the excitement on day one of the Berkshire meeting. And I think we've got 24,000 dilly bars and Buster bars. So I think we've got enough, but we'll see. 24,000. I tell you, that sounds light to me, considering you have 38,000 people registered to come to the meeting, but that's more than you've had in the past? Yeah, it's 2,000 more than we brought last year. So, you know, there's some that unfortunately don't find us or make the wrong decision of not stopping by and getting a dilly bar. So.
I'm interested in the logistics of having that many frozen items that you have to bring into this space.
Yeah, it's actually, the team's been doing, they do a wonderful job, and they've been doing it for so many years. We just bring the products out of a warehouse. We have the truck out back, and you'll see people continuing to go through with dilly bars and Buster bars throughout the day, making sure that they stay frozen. And so when you get it here, it's no different than if you get it in a store, that it's just the way it should be. Trucks
lined up on the interstate off-ramp, making sure they get here.
That's right.
You held prices steady, so you're only charging $1 or $2, depending on what you're getting?
It's $1 for the dilly bars, $2 for the Buster bar, and all of the proceeds go to Children's Miracle Network hospitals.
Very nice. Love to talk just a bit about the business. Actually, this week, we heard from McDonald's, Wendy's. They're talking about a little bit of a slowdown among maybe lower-income consumers, seeing some traffic pressures. Are you detecting any of that in your business?
Yeah, I would say, you know, first of all, this is the 85th birthday for Dairy Queen. Okay. Started in 1940, and we're really excited. We're getting off to a good start. We're seeing those same reports, but for us, for Q1, both sales and transactions were positive in our U.S. business, Canadian business, and international business. So we feel good. Things have flattened a little bit more in April. So when we think about the consumer, yes, the consumer is getting pinched a bit now. They're making decisions about where they're going to get the best value for their money.
Do you adapt and respond to that in any way, or you feel as if your menu is kind of going to be accommodating to whatever environment we're in?
Yeah, you always have to remain agile in this business and make changes as quickly as you can. But there are some supply chain constraints that sometimes prevent us from moving as quickly as we want. So the key for us is that, number one, do we always have great tasting products? Number two, do we have everyday value that consumers know about and that's appealing? For us, that's our $7 meal deal here in the United States, and it's a fantastic value for consumers because it's full-size menu that comes with a treat. And so for us, it's a combination of promotions as well as making sure that any day the customer comes in, they can find value. But I would say the most important thing, Mike, is that if you go in as a consumer, you want to go in and get a great tasting product, and you want to walk away realizing that you mattered, that the hospitality was good, not only the products. That's the fulfilling experience.
You mentioned international. Obviously, it's a big part of the strategy is growth outside the U.S., specifically China. What does the current environment mean for that? Obviously, you're not necessarily sending things in and out of the country necessarily, but how has that business been?
Yeah, it's been interesting. China continues to be our fastest growing market from a unit perspective. So in 2024, we opened 429 restaurants, I believe the number is. And of that, 273 were in China. So we have a vast market there. We have some strong franchisees that are continuing to grow. They continue to believe in the brand. And as the middle class has developed in China, our brand is aspirational, and it's something that they want to grab. I will say that last year was a little bit flatter than what we had seen, and that is an adjustment of the economy. Consumers recognizing for the first time in a long time that their economy has slowed, and as a result, no different than we as American consumers or Canadian consumers, we start to adjust our purchasing habits. The good news is, even though it slowed a little bit last year, we've bounced back and have had a really nice Q1 in China.
Is the brand in China, you mentioned it's aspirational, is it identifiably, quintessentially American to the Chinese consumer?
A great question. I don't know that I can answer that for this reason. The key is, do you have a product that people love? And our product resonates around the world. That's the greatest thing, particularly the treats, but also the chicken strips and the burgers, which we're bringing into China now. The consumer, though, if you localize it in the right ways, the consumers embrace it as their own. And what I mean by that is our blizzard flavors. Oreo is going to be a big seller wherever you go. But in China, green tea becomes really important. If you're in Asia Pacific, have durian fruit as the fruit as opposed to strawberries or something here. And China, a promotion we have coming up is pistachio. So these are different flavors, but they are flavors that resonate with the palate of the Chinese consumer, and that helps them embrace the brand.
And so in terms of looking ahead, in terms of the, I guess, the velocity of expansion outside the U.S., have you remained on course? Have you refined any of those plans?
Yeah, I think we're on course, at this point. The key is going to be the consumer, whether it's the U.S. and Canada or whether it's in China. Depending upon how the consumer responds, tariffs are a challenge for everybody, and the biggest concern we have is the impact on the consumer.
Yeah.
After years of high interest rates and high inflation, consumers are pretty weary. And now it's fear, right? It's the uncertainty that's causing them to become a little more cautious in their purchasing decisions. That will have the biggest impact on our business, but we believe we've got the products, the hospitality, the service to break through that.
I know Warren was making the rounds here. Did you catch up with him this time?
Did have a chance to see Warren.
He probably feels as if he kind of knows what's happening with the business, but did he have anything in particular to scrutinize?
Well, it was kind of interesting because we went in and I said, Warren, we had a positive sales and transactions in the first quarter, and he says, yeah, I saw that in the reports that you submitted.
Okay.
That shows how connected he still is with these businesses. And we had an opportunity to talk about the new products and about the 85th birthday of Dairy Queen. And he was wondering if we were the oldest QSR or not. So we debated that a little bit. So.
Debated it because it's in dispute, or?
Well, we're questioning one other that I'm not going to give press to today. So
interesting.
Yeah, exactly.
Interesting. Well, Warren feels like, 85, that's not.
Exactly, that's nothing, right? Just getting started.